guys. This is a Monday, March 18th market closing wrap. We're going to be taking a look at the SPY futures here /ES and the /VX futures. That is the volatility indicator for the market. So here's the future. We have our Monday, March 18th candlestick right here, pretty green day. And here's the future for March 19th. Futures trade 24/7 round the clock. That's why we already have a March 13th candle here, and obviously the trading day hasn't started yet. So we'll zoom out real quick. Alright, so we broke our quadruple top over the past few days, and that could be an argument for the end of this correction, and now the market's going to be headed bullish again like it has in the last 10 years. However, I personally might argue that that's not the case. We do have a 50-day moving average headed steeply towards the 200-day moving average, and again, that could point in a bullish direction. However, since December, around Christmas time, December 21st, December 25th, the market's made an obnoxious 22% gain with little to no questions asked, very few corrections, maybe one notable one right here that dropped about 3%. The market can't explode forever. A 2-month rally of 20%, 3 months now. It's quite unheard of. I believe the market is severely overextended, and that's why it's still side of the bearish case, even though we broke through this quadruple top here. If we look down here on the momentum indicator, this is the MACD. This essentially shows how much juice the market has left in it, if that makes sense. As prices have been making higher and higher highs, and we see this little 20% bull run here, our MACD is finally starting to top out around here. Generally, as the prices make higher highs and the MACD is making lower highs, that's what you would call bearish divergence. That is when the momentum is starting to point south while the prices continue to point up. It means the market is losing momentum, and it means that there is likely to be a crash to follow. You could check these on your own if you'd like to. Let's see. Typically when we see a drop off in the MACD, for here example, is our first crash. As soon as the MACD starts to make lower highs while the prices are making either equal to highs or slightly higher highs, here we have about equal to, while the MACD is clearly starting to drop off. This is what led to our first sell-off. And now here again we have this top dropping off. I believe that's indicative of the follow-up sell-off. Now here is the really cool part. We're going to head over to /VX on the daily chart. And VX is a volatility indicator of the market. What that means is that essentially as the market is moving upwards, as we're in a bull market, VX will be headed downwards. Volatility essentially is an indicator of when the market is selling off. So when the market is buying into and there's a bull run, here from our bottom around December 25th, this 20% positive run has been a minus 52% run on the volatility indicator. It's typically going to move opposite the market and only spikes with market sell-offs. I'm going to zoom in here, and this is important. This is the Monday, March 18th candle, clearly a big red day on VIX, considering there's a large green day for SPY, 4% drop here. However, this is the future for VIX, trades around the clock. The market's not open yet, but this is what it sees at midnight. Strangely, I did not see a corresponding gap on the /ES futures, and I'm guessing because that's VIX does not correspond to the ES futures, it corresponds to the actual market itself. Here we have a giant 15% gap. This is the 319 candle. This is March 19th, Tuesday. This is for tomorrow morning. I would expect this giant green spike of 15-16% on VIX has to correspond to a large sell-off tomorrow morning that I'm thinking we're likely going to see in the pre-market. Again, if we're to look at the momentum, we're going to look at the momentum for the volatility indicator here. This is what is known as a bullish divergence, similar to the bearish divergence we were looking at on SPY. VIX here has prices that are making lower lows. Here's a line on the momentum indicator that I had drawn in over a week ago. We see momentum is continuing to make higher lows. There's an upward slope on the bottoms of the momentum here, while the prices have been making lower lows. You can see these line up from start to finish. Prices continue to make lower lows. And now here, I could erase this line, now add in a new updated one. We have made yet again another high low, another higher low on the momentum, while prices make a lower low. That is a huge bullish divergence. And as you can see, there's a 15% gap up to respond to that. What that means for movement in the market tomorrow is going to be huge as to whether this bullish rally is over or not. Definitely things to be paying attention to. I'm expecting massive volatility in the market in the time to come. Whether it be bearish or bullish, I could see the argument for both sides with this 50 rising towards the 200-day SMA at such a steep slope. Especially after breaking these quadruple tops, there's obviously a case to be made for the bulls. But with the momentum and that giant spike in the VIX futures, I would definitely side with a bearish case here for the future. So hope this video helped. Like, subscribe, comment. That helps us out, and get your numbers up.